Hi, friend, Simit here from InformedTrades.com. Today is Monday, May 19th. Time for our daily Forex chart review. Basically, in these sessions, I share the trades I'm placing, adjustments to existing positions that I'm putting on in the market. So you can, basic ideas we can all learn together. You can sort of watch me trade, learn from my successes, learn from my mistakes. We can learn together. Of course, in these videos, I'm just covering my style of trading and the Forex trades that I'm putting on. We have a whole bunch of information on other styles of trading, other markets over at InformedTrades.com. Check it out. Register as a member. Share your knowledge. We can all learn together. Let's get started. Okay, on the screen right now is a Euro Aussie chart, but let's take a look at gold, as I often like to do. Okay, gold now at 1301. The major thing here, is that we stay above this support level. So that's really good. Let me actually change this a bit. Let's make it nice and thick. Make it black and solid. These charts from TradingView.com, by the way. Really enjoy these charts. They've saved me a bunch of time. Okay, so here we see, so long as that support at 1280 is maintained, and let's actually add the moving averages. Okay, that's the other issue. Maintaining support is very positive for the bulls. Big battle up here. Once we clear 1321, I think a market could move much faster. That's the major overhead here. Being below the 50 and 200 exponential moving average is keeping a lot of bears in the game. Once that's clear, you're going to see a lot of short positions closed out and a lot of automated strategies start to signal bullish signs for the bulls. At least that's sort of my take. Of course, I'm having a long-term mentality on gold, based largely on fundamentals. So I'm in this for the long term. I do want to add this here. We have a bit of a trend line here, a pattern of rising highs. Rising lows, higher lows, which I think is also bullish. But let's see. Again, let's see if we can close above 1321, and conversely, if we close below 1280, I think that could pave the move all the way down to 1180. So that's gold. Now on to my Forex trades. I should note that I'm at maximum risk capacity, which lately I have been saying more of. And some may say, oh, well, you should take more risk, and that's one way of viewing it. I still don't like that idea. I'm not comfortable risking more than 1% of my account balance. I think it's good to have a risk tolerance that you're really comfortable with. So the way I look at it is, if 1% of my account balance was ever lost at any time, obviously I'm not looking to lose, but I wouldn't lose sleep over it. So that's sort of the position I want to be in. And at 2%, I'm a little more sensitive to that. I really don't want to lose 2% at any given time, on any given day. So that's my take. Obviously, there's a lot of subjectivity there. If you're comfortable with more volatility, you can take more risk, possibly enjoy greater return as well as a result of that. Of course, that's not always the case. Okay, so I have 6 trades on. 2 of them have been moved to break even. Let's start with those 2 trades first. One is Canada Swiss. Okay, so you can see that here. Now it's just a matter of holding until this, if we reach this level. That's about it. Wait and see with Canada Swiss. The other trade I have on is Pound Aussie. That's at break even. And we're rallying here. I'm short this pair. I'm a little concerned because we're starting to see some bullishness here. This could be a bottom here. But we'll see. I feel comfortable. This trade has already been de-risked, so I'll hold on. We can exit. Price could still fall down to the 200 exponential. We'll see. We still are also beneath that trend line. If there was a time where I'd close it, it might be if price gets above this trend line here. Then I might be interested in calling it quits on that trade and just taking whatever profit I can get. So those are 2 trades that have been de-risked, meaning if the price, the red line denotes where the stop is, that's also where the break even is, meaning I move my stop from above to break even. If price rallies and hits this level, I'll be out of the trade. I won't lose any money though. So that's what I mean when I say the trade has been de-risked. The next 4 trades have not been de-risked, meaning if my stop is not at break even, if my stop gets hit, I will lose money. And I don't want more than 4 of these trades on at a time. I'm risking 1/4% on each one. So if all my stops got hit, I'll lose 1%. Dollar Canada, I'm short this pair, and here's the orange line to watch. Once we close at or below this level, then I will. Actually, we're pretty close. Let's zoom in. Maybe I may have some justification in moving this to break even. No, not yet. If you notice, this is technically above. The close is above this orange line, so it might happen today. If we close at or below this orange line, I'll be able to move my stop from, which is currently this red line here, down to the gray line here, down to break even. We'll see on that. That's Dollar Canada. The next step is to move to break even. So far, so good on that. Kiwi Dollar, another trade. So these are both short dollar. I'm long Kiwi Dollar and short Dollar Canada. So the basic implication that is is that I'm long, or I'm short, excuse me, the U.S. dollar. And I have another actually a little over alignment with. I don't like to bet more than 0.5% on a single idea. I do actually now have 3 trades on that have not been de-risked that are speculating on a weaker dollar. So it's short. I'm long Euro dollar, long Kiwi dollar, and short Dollar Canada. So it's 3 trades. In hindsight, I should have been a little more careful in seeing that. That's 3 trades where I'm speculating on a weaker dollar. A little more than I like. So far, they're all in the favor, so that's good. But I should be a little more careful about that. Kiwi dollar, here it is. We see the logic. We're at a 61.8 Fibonacci from this swing low to this swing high. 50 simple moving average right around here. We have horizontal support going back to March 19th, 2 months ago. So a bunch of signs here. I'm long at this black line. My stop is at this red line. If we can close at or above this orange line, I'll move to break even. Target profit's actually a little higher than this. It'll be off the chart. But clearly an uptrend too, Kiwi dollar. So I feel good about this trade. So far, so good on that. Euro dollar is the other one I have. I just mentioned this. So I do have too much exposure here. Too much short dollar exposure here. But so far it's working out. So I got long at this black line based mainly on this hammer on support. And I really love to see a long wick pattern off support. There was, ideal situation, I would like to be price to be above the 50 simple moving average where I'm going long. I like that as confirmation of the trend. However, I think you can also argue the trend here is pretty bullish. This high is higher than this high here, which is higher than that high. So we have some type of a pattern of higher highs in place where you can make that argument. A clearer pattern of higher lows. Just upward sloping chart. We're also still above the 200 exponential moving average. And also from this swing low to this swing high, we are in between major Fibonacci levels. All these factors, the support here going back to April 4th, we're at that level, plus the hammer. So we had enough signs here where I felt comfortable going long. So that's and hammer off support is my all-time favorite signal. And then the one order that just got filled this morning, which I had put on last week, is Aussie Canada, long Aussie Canada. Yeah, so far this is in the money. Here's the black line. It's also another major. Where is this? Oh yeah, from this breakout here. So from the breakout, this big candle, from the breakout to the recent highs, we're at a 61.8 notch level. This support level going back to April 7th. We see that support established here. Price is now out there and right near the 50 simple moving average. Clearly in an uptrend also. So all these factors I thought it'd be appropriate to go long Aussie Canada. Targeting this here. My stop is here, so still got 3-to-1 reward risk. And that's about it for the trades I have on today. Let's see if one of the main things I'll be watching is when I can de-risk Dollar Canada, that trade. That might be something I can do tomorrow, and that'll free up opportunities to look at what else is out there. That's about it. Any questions you have, join us at InformedTrades.com. Best of luck in your trading, and we will see you tomorrow. Take care.